But let's invite Udayan Mukherjee now to speak with us. Udayan, good morning. Thank you very much for joining us. It's been quite a while. Well, the markets meanwhile have almost reached out to all-time highs. We're just a whisker away. What's the sense you're getting? No stopping this momentum rally for now?
For now, there is nothing that you can do but to participate in this move, Lata. I mean, that's what we keep speaking about every time we speak, is that there is no point trying to second-guess the market and talk about valuations coming in the way of the upward progress, because that's not how markets work. When they are in a momentum spiral fueled by liquidity, they will move in that direction, and there's not much you can do about it. Now, the question is, do you want to participate, or are you faint-hearted and you do not want to participate? That's your call. But you cannot just say that because valuations have got expensive and earnings have not caught up to the extent desirable, the market will not move up. So I don't think this is a case of whether the market will move up or not, rather a question of whether you want to play along with the market or you want to stay out because you're defensive in nature and don't want to take extra risk on the table right now. And I think it's instructive on that point to see what the domestic investors have been doing, because I think they were broadly sitting out of this party for the last 4 or 5 weeks. And when the market went sideways, I mean, the Nifty just meandered in that 86, 8700 for a good 4 or 5 weeks or 5, 6 weeks. And domestic investors were almost waiting, saying, okay, this is the market top, and this pause that we are seeing right now is a prelude to a much deeper price correction. That price correction never happened. In fact, the market broke out of 8700, and now we are almost knocking on the doors of 8,900. And last week, domestic investors actually put in about 1,800 crores. So it's almost like they were waiting and they got frustrated and they gave up on waiting for the correction and entered the party and joined in the momentum. And that's what the market will make you do in such phases. They will twist your hand and force you to participate, because it's very difficult to sit out of a market which is moving at this pace.
Udayan, hi, good morning. So let's talk about the leaders in this market. Lately, we've seen a churn of leadership. So, sectors like autos have started to participate quite a bit. ITC has regained a bit of leadership. The HDFC twins are back on the fore. How have you read into this churn, and how should retail investors approach it now?
I think, Sonia, the market's actually running on 2 pillars right now. I don't think it's very broad-based. And one by one, some of the sectors are beginning to put their hand up for underperformance. I mean, it's happened with IT, it's happened with pharmaceuticals, now it's happening with telecom. But I think the 2 engines of the market remain and have been for some time: financials and consumers. Anything related to these 2 themes is doing well. So financials is private banks, now public sector banks have joined in over the last few months. Housing finance companies, NBFCs, that whole cluster is performing like a rocket. And on the other hand, anything to do with consumption, whether it's FMCG, whether it's autos, you name it, that whole space. But if you look outside these 2 spaces, I know this morning infrastructure is in play because of this whole arbitration ruling, but outside of financials and consumers, I think the market's now beginning to struggle for ideas. Now, the fallout of this is that financials and consumers are getting more and more expensive with every passing week, but I think the rest of the market probably is struggling to keep pace. So I guess for retail traders or short-term investors who are participating in this rally for the last few weeks, I think they should dismiss notions of expensive for now and stay with the 2 pockets which are performing and which are getting more and more expensive, because, as I said, this is a matter of tagging along with the market right now and not taking big calls on valuations and therefore not participating, because you don't know how long this rally will continue. And it may go up 25–30% more, these 2 sectors, and you would just have sold out too early. So I think it's better to let the market tell you when it wants to stop rather than you deciding when it should stop.
Okay. Udayan, hi, good morning. The other important piece of the puzzle, of course, is Infosys. For the first time since Vishal Sikka took over, the stock is at 52-week low, and while the market is at 52-week high. Do you think this is a passing phase, or are you sensing some bit of derating in valuations even from here on? I ask you this because you've tracked this company for more than a decade now, or nearly 2 decades now.
As I said, Anuj, last time, I think Infosys right now is suffering from a bit of a technical hangover for all the addition in ownership that it loaded on for the last year as Vishal Sikka was performing quarter after quarter, I think some of that sheen might have come off, and therefore a little bit of that ownership problem is getting corrected. Generally, my views on IT have not been very constructive for the last couple of quarters. You know that. I still think IT will struggle from here on, and the weaker companies will get completely lambasted. You've seen that happening with Wipro to an extent. You are seeing signs in some of the mid-caps like Mindtree as well. So I think this is going to be a difficult phase for IT as a sector. On Infosys particularly, I think it would be fashionable to say that dump that stock. But my sense is that valuations of Infosys have come down to very, very attractive levels, tracking their long-term averages. Now, this is not to suggest that you should jump in and buy Infosys right now, but I think the time to sell that stock is probably gone because the price correction has been fairly significant. And once again, very swiftly, Infosys has built out another 20% valuation gap between TCS and itself, which it has had closed after so many years. So now I think the price damage is done in Infosys, but for the overall sector, I think it would pay to be a bit cautious from here on because IT probably has a few rough quarters ahead of itself.
Udayan, how do you approach finance? In fact, entire finance space, banks, non-banks, small banks, private banks, PSU banks. Actually, the outperformer here is PSU banks. Surprise, surprise. Except for the odd Ujjivan and RBL.
You have to play along, Lata, right now. I know some of these pockets within finance, as you well know, have become quite expensive. But, you know, you could have said that maybe 1 month back and missed another 10% of that rally. So we have to understand what kind of money is coming in. Now, I'm not saying this is stupid money which is walking into India, but I think the color of money is passive at this point in time. Active fund managers, if you ask them, are probably not getting that much money. And therefore, what works in passive money situations is big country plays. So when you look down out from outside India, you're not a very active fund manager, and you ask around saying what works in India, they will tell you two things work in India. One is financials, because you have great banks, and financials always make money for people, with exceptions of PSU banks every other year. And consumption stories, because consumption is kicking in India right now, and you've got more triggers for this consumption theme, and therefore that is what the passive money will walk into. So you just have to be where the money is flowing into, and you just cannot stay out of financials in a market like this. Within that, do you want to slice and dice the game and say something's got very expensive, move it out, and maybe move it back into some of the pedigreed blue chip names? So sometimes you'll sell an NBFC stock trading at 4.5 times book and say, if I have to pay that much, I might as well move some of that money into HDFC Bank for that valuation, or IndusInd or Kotak Bank. That kind of churning you can do within the portfolio. But should 30% of your portfolio be in financials? I think there is no way out of that.
I know at a time like this, people don't generally like to talk about the downsides or the threats to this market, but it's always better to be cognizant of that, Udayan. It seems like it's a purple patch for the market now, but do you see any threat looming on the anvil?
No, there are many threats which are possible. Now, what will precipitate those threats and make them materialize? And the bigger question, when, is something that none of us know. But, so could you make the case for a significant correction in global markets? Absolutely, yes. Could it happen in September if the Fed surprises with a rate hike? It could, but equally easily the Fed may not move. And in fact, that is the consensus right now, which could pave the way for in greater extension of this rally before the correction happens. So, there is a case for a correction, which is why you cannot be very, very relaxed participating in this rally at this point, with the point which I keep laboring every time we speak. But, will the correction happen after the market moves up another 10%, and the correction then brings it back to where you're standing today? So you say the correction starts from 8,800, but the correction might start from 9,600 and bring the market back to 8,700. Then you're no better off. So I think this is a matter of timing, which is impossible to do. But I think I don't fear talking about the downside. I am worried about what might happen in the course of the next 3 months. I think there is a real possibility of a significant global correction at some point. This is not going to be India-led. The case for a correction in India is probably only valuations and none of the other metrics. The case for a correction globally is not just about valuations. There are many moving parts which can trigger off that correction. So, as I keep saying, participate, but don't go to sleep while participating, because you might be woken with a very, very rude jolt one day.
Oh, yeah,
okay, Udayan. On that same advice. Thanks a lot for joining us.